With the MSCI index down about 14%, it's not been a great year for emerging markets, but TheStreet's contributor Kabir Sehgal has 3 winning stocks for next year. Good to see you here. Before we get into some of those specifics, is 2016 going to be a better year for EM, do you think?
I think so, and it's going to begin in a couple weeks when the Fed raises rates. That's going to remove a lot of risk from the market, and emerging markets are a very risky asset class. So investors are going to get more comfortable with risk, and they're going to go into emerging markets.
And in particular, you like the idea of investing in China for next year.
I do. China makes up about 25% of the emerging market index, and China is moving from a manufacturing-based economy to a consumer-based economy. And what's the one company that benefits from that? Alibaba.
And so Alibaba, in terms of, is it kind of like the category killer, would you call it then?
I think so. In the bull market, it's the biggest cash cow. Now, I worked on the Alibaba IPO, and investors were very excited coming into it when I was at JP Morgan. I worked on this on the roadshow. And the thing they were most excited about was the mobile piece. Can they monetize their mobile offering? And sure enough, we're seeing from the last earnings report, Alibaba is making more money on their mobile offering, and they're investing more into logistics and analytics because Alibaba has a huge swath of data on consumers.
And I guess, of course, it's also easy in that you're buying a New York-based stock while investing in China. So let's leave China for a moment because Mexico's another area that you see some improvement. You think the economy is going to pick up a little bit there. So how do you play Mexico?
You could easily buy a Mexican ETF, but if you want more precision, you go with a bank called Banorte. They're one of the largest banks in Mexico. They have 14% of the loan market, and they're growing their top line because revenue is growing. They're going to be growing their compounded annual growth rate from 6% to 7%, and they're also trimming expenses. So that drops to the bottom line. It should be a good stock to buy going into the future.
And within Latin America, is Mexico the best pick for next year?
Yes. Brazil's
there's still some problems.
Brazil's still in recession. Mexico is the second biggest economy in Latin America. Mexico is very linked to the U.S. economy. The better the U.S. economy does, the better the Mexican economy does. Why is that? Because a lot of Hispanic Mexican workers send their remittances down to families in Mexico.
All right, and you also have a way to play El Nino in the emerging markets, and this is a company called Indofood. Tell me about that one.
El Nino, what is El Nino? It's the warming of weather. It means there's going to be more drought in Southeast Asia. When there's more drought, that means there's not as much output from the farms. And so the commodity prices will increase. Indofood is a wheat food company. They operate about 23 palm oil facilities. So palm oil prices will probably go up. If there's a 5% increase in palm oil, revenues from this one company, Indofood, will go up about 8%. And so one of the catalysts for Indonesia, then again, is El Nino.
So just to end things, emerging markets are always riskier than some of the more established markets like the U.S. What are returns that people should expect when it comes to investing in EM?
I think right now, on a base case, maybe about 15%, because emerging markets have been beaten down, not just for this past year, but for the last few years. And so as risk gets removed, I think you can expect 15%, bull case maybe 20% going into next year.
Kabir Sehgal, good to talk to you. Thanks so much.
My pleasure.
I'm Rhonda Schaffler for TheStreet.